Okay, so this video, just let me tell you what it basically does. I'll go through all of the more important sections of the VAT Act. The ones that are truly difficult, I will do in their own individual sections. Things like change in use, apportionment of VAT, okay, leasehold improvements, going concern, cessation of business. Those types of sections I will do in their own videos, but I'm going to go through all of the VAT implications with you now. So let's just start. So first, VAT diagram. I've got here, VAT is levied on the supply of goods or services by a vendor carrying on an enterprise. Okay. And people look at me and say, sure, do I need to know this? And you know something, it's probably one of the more important ones for you to know, because let me just explain something to you. Imagine you got given a practical situation whereby you got a tenancy within a shopping mall. Woolworths come in, Woolworths say, I'm not interested in having another food producer next to me. So what the shopping center does is it says, we're kicking you out, we're putting Woolworths in, and we're going to pay you 2 million rands worth of compensation. And then the question is asked, so is the compensation subject to VAT? Okay, or not? And people are going to sit there and go, you're not going to know whether the compensation is subject to VAT. So let's just go through how you might deal with this. So whenever you don't know how to deal with something, this is the default position that you always come back to. So whenever there's something you're not quite sure whether there's VAT or not, you come back and you sit there and say, VAT is levied on the supply of goods and services by a vendor carrying on an enterprise. And guys, we don't know whether it's a supply. So what do we need to do? Okay, is compensation a supply? Yes or no? So what we need to do is we need to have actually tagged off our books properly. And here's the VAT legislation sheet. And guys, I've tagged off all of the sections and I'm going to come back and show you. But guys, there it is. In section 1, there's a definition of a supply. And you're going to go and see whether compensation paid is within the definition of a supply. And they do discuss about rights inside there. Okay. And the next thing is the supply of goods or services. Okay. Will there be a good? There's definitely not a good for compensation. But can it be a service? And you'll see the definition of right. A compensation right is included in the definition of a service. So we're going to say, have they supplied us with something? Yes. A service? Yes, because right is included in the definition of a service. And what are we going to be able to do? Okay. By a vendor? Yes, the shopping center is a vendor. Are they carrying on an enterprise? Well, rent is an enterprise. Therefore, we're going to charge VAT on the compensation. Okay, and that's the way that you're going to have to do that. So please just understand this. This is your default position. This is if you don't know what to do. Come back, have a look at the definition of a supply, have a look at the definition of goods or services, and make a decision based on that. And that's why this diagram is very, very important. Okay, just another thing, guys, just at the bottom here. All Section 64 and 65 of the VAT Act state the prices displayed must include VAT unless the VAT exclusive price, the VAT, and the final consideration are separately shown. So in a shop, if you walk in and they've got something marked on the shelf, you may assume that something is including VAT by law. If it is not VAT inclusive, they need to say that the amount excludes VAT and this is how much VAT is going to be on it. So that's something very, very important from a practical perspective. So that's there. Please understand that. Okay, next diagram. How not to make mistakes in a VAT question. So I'm just going to give you a couple of pointers, guys. So these are the ones that are called the FUBAR ones. The ones that if you don't get them right, you fuck it up beyond all recognition. Terrible, terrible stuff up. Okay. So guys, you need to look and see whether amounts include VAT or exclude VAT. If amounts include VAT, you need to do the amount times 15/115. If an amount excludes VAT, you need to do the amount times 15%. Often in exams, they say insurance cash payout is equal to R1 million. Guys, if it's a cash payout, it includes VAT. Please just make sure that you understand that. If there's VAT on that particular item, but generally with insurance, there's going to be VAT on it. Okay, so that's principle one. If amounts include VAT, times 15/115. If amounts exclude VAT, times 15%. Second of all, guys, what is the VAT category? Could be monthly, that's a category C. 2 monthly, that's A and B. Could be 6 monthly, that's a D. Or a 12 monthly, which is an E. Okay, guys, if you're answering an exam question, please just have a look to see what VAT category is. Because if they look at you and say, please do the April VAT return, okay, what's going to happen? If you're category C, it's just April. If it's a category A or B, well, it can't be an A because A's are Jan, March, May, all the odd months. So a B category for April would be March and April. Okay, if they ask you to do a Feb VAT return for a category D, that would be a 6-month return. And I have seen it happen once, but that was in the 1990s when I was helping out. But I have seen a category D in an exam before, and it would be a 6-month. E you won't get. That's just for holding companies with management fees and stuff like that. I don't think you'd ever get that. That's a 12-month return itself. Consideration 3, guys. Are you registered on a payments basis or an invoice basis? Just let me explain, guys. Companies and CCs have to be on an invoice basis. There's no choice in the matter. So if you get a company, it's always invoice basis. What's the rule for invoice basis? Earlier of payments or invoice. Okay. If you're a natural person, you can be on a payments basis provided you below 2.5 million rand. For a payments basis, guys, I've got a diagram that I'm going to do with you right now. So please just make sure you see whether you're on an invoice or a payments basis. And then, guys, the other thing is just see what your book is. Is it a general ledger? Because general ledger are great for invoice questions. And cash books are great for payments. But if you get a cash book in an invoice question, please understand you need to adjust for accruals. And if you get a general ledger for a payments question, you need to adjust for payments. So it's always a good thing not to screw up a question, just to have a look at the book of entry that you're looking at, because general ledger should be used for invoice, cash books for payments. If you don't have all of that information, you're going to have to convert a little bit of the stuff. So just again, consideration 1 for not stuffing up something. Is it inclusive or exclusive? And times by 15/115 if it's inclusive. If it's exclusive, times by 15%. Get the VAT category right. If you're doing an April VAT return, it's important to know whether it's 1 month or 2 month. If it's a February VAT return, it could be 1 month, 2 month, or 6 month, or it could be a 12 month as well. Okay, so make sure you do that. Companies, invoice basis. Individuals, turnover less than 2.5 million, can be payment if they want to be, but they can also be invoice. Have a look to see it. Do I have a general ledger or a cash book, and do I need to make adjustments to it? So that is diagram 2. Diagram 3, payments and invoice basis. So guys, essentially invoice basis, okay? This is really, really important because did you notice on the VAT example that I did with you before, I basically said general rule for invoice is the VAT is on the earlier of date of issue of the invoice or the date that the payment is received. So this is going to go into just about every single discussion question at least once. Okay, so you need to be able to actually put that in. Okay, invoice basis, all companies, corporate entities have to use invoice. And natural persons where it's more than 2.5 million. Payments basis can be used by other people, but just remember, over here, it says when a transaction other than a property transaction exceeds 100,000 Rand, the invoice basis has to be used. So even if you're on the payments basis, if a transaction's for more than 100,000 Rand, you need to use the invoice basis, even if you registered on the payments basis itself. So guys, you can go through that. Here are your VAT categories, as I've discussed already. You can have a look. Registration often pops up. Okay, it's different now. Okay, so I changed a couple of years ago. It's not if you are going to be over 1 million, it's when you get over 1 million. So let me just explain. First consideration, if you sign a contract where in terms of that contract, you're going to make supplies exceeding 1 million, then you have to register now. So you don't wait, because I've got a contract and I know I'm going to be over 1 million. If you don't have signed contracts, you don't have to register until the month that you get over 1 million. So if month 1 is 400, no reg. Month 2, 400, no reg. Month 3, 300, I now need to register because I'm going to be over 1 million and I need to register for VAT. So it's only in the month that you do it, although voluntarily you can register earlier. Okay, so you can see voluntary registration, you need 50,000 or more in the last 12 months or likely to get 50,000. Okay, commercial accommodation, if you're running a B&B or something along those lines, please just remember that needs to be more than 120 if you're running like a B&B or something like that. Commercial accommodation has to be at least 120 before they'll register you, not 50. Okay, so that's there. And then what do you need to remember? Abnormal transactions that are not likely to recur, you don't need to include in that 1 million amount. So I sell my house for 2 million. I know it's more than 1 million, but I don't need to register because it's an abnormal transaction that is unlikely to reoccur. Now, guys, often in practice and in exams, you see foreign suppliers. Now, guys, you don't need to learn foreign suppliers. You don't. Okay. So for every diagram, this shows you the sections that you can do so that you can find stuff. So as you can see here, I did payments and invoice basis. So next to section 9.1 of the VAT Act, I think you should put a tag that says time of supply general rule. And then what do you highlight inside your SAICA legislation handbook? Okay, you should highlight this: time an invoice is issued or payment of consideration, whichever time is earlier. So guys, if you put a tag there, you put the tag saying time of supply rule, and then you highlight that. It's very, very easy to remember the time of supply general rule. Section 10.3's got the value of supply general rule. And guys, highlight, I'm someone that really likes if you've got 12 highlighters. So highlight the tag in yellow, highlights in the book in yellow, you know where the tag and the writing go together. And if you're on the same page, the next one you'll do in blue, and the next one in green, and then in purple. And then if you really like that pastel set of highlighters, you'll use all of your pastel colors so that you know which one it relates to. So you'll see as we go through, I've got everything. There's the rules for registration, for a contract. There's your tags. Okay. Compulsory registration, items removed from 1 million. There's another thing there. Foreign supply registration. Guys, what's going to happen? It says in section 23(1)(a), overseas sellers have to register if turnover is more than 1 million. So like if you're Amazon doing, okay, something, it's more than 1 million, you need to register for VAT in South Africa. The other thing, guys, I just wanted to show you is for your registration itself. Sorry, I just want to just, there we go. Okay. Guys, this one, foreign internet sellers. That's another thing just to bear in mind. You don't need to learn it off by heart. But guys, if someone's selling overseas into South Africa on the internet, 2 out of the 3 things that is over here needs to be in place, and then they have to register for that. So if they ever ask you, should Amazon register, or you've got a foreign company that wants to register for VAT, do they need to register? Here it is. It's in section 1, paragraph 6 of the definition of an enterprise, and it shows you when they need to do it. So The three things are: the recipient of those electronic services is a resident of the Republic. So whoever receives it is in South Africa. The payment, okay, originates from a bank in South Africa. And the recipient of those electronic services has a business address, residential address, or postal address in the Republic. So if 2 out of those 3 things apply, that foreign internet seller has to register in South Africa. Okay, so I've got all of the things there. You don't need to learn it off by heart. If you've tagged it in your book, you can go and find it, and you'll be able to answer for a foreign person that is trying to sell things into South Africa. Deregistration, you can deregister. Partnerships, guys, please just remember, if a partner leaves, same partnership, same tax number, same VAT number, you don't need to re-register every time a partnership changes. They carry on using the same VAT number itself. And then, guys, if you have more than one enterprise, so you've got 5 enterprises all earning 900,000, they can combine all of them together and penalize you and charge VAT and charge penalties and charge all sorts of stuff if you do something along those lines. Okay, next thing, guys, exempt supply, 0 rated standard. Here's a diagram, you can have a look. Okay, what I've got here, guys, is the 4 things when something's made for no consideration. So often in exams, items are supplied for no consideration itself. Let's just go through the rules. Okay, so I've got here, when a supply is made for no consideration, one should consider whether the supply has been made in the course of or furtherance of an enterprise. So let's just go through this. It says an example of a good supply for no consideration, but still in the course of furtherance of an enterprise, is a promotional item given by a rep to a customer to encourage customers to purchase goods in the future. You've heard of Viagra. Well, now we've got the next best thing. But don't take my word for it. Here, go take it at home. Okay, you're going to have the best sex of your life. Okay, promotional item. Okay, it is still given to the doctor in the course and furtherance of an enterprise. So what is your value going to be? I gave it for nothing. So how much VAT is there going to be? Times 15 over 115. Okay, so promotional items, it's section 1023 of the Act. You'll see that it's on your tag sheet. Guys, supply for no consideration, it's treated as 0. Donated goods, guys, generally, okay? General rule when you donate something is you do not donate for business purposes. You normally donate without business purposes. If you donate, guys, outside of business purposes, it's a change in use. I bought the goods because I was going to sell it. I've now donated it to the public benefit organization. Change in use. There's no business intent there. So we're going to have that, okay, on the donation. So normally for donations, if it's not for business purposes, change in use, and there's going to be VAT. Okay, when a good is taken within a business, is taken out by the owner for his own personal use, guys. I run a pharmacy. I've got a hot date tonight. I go and I take a box of condoms off the shelf. Okay, I bought it for business purposes to sell inside my pharmacy, but I've got a hot date tonight, so I'm going to take the box of condoms for myself. I've changed from a business purpose to a private purpose. There's going to be a change in use. There'll be VAT when I take it for free for myself. Okay, because if the box of condoms gets opened, it's not going back on the shelf. And then, guys, a good given to an employee for no consideration will be a fringe benefit and attract VAT on the supply to the employee. So it depends on how it's valued for fringe benefits purposes as to how you're going to account for VAT in it. But there will possibly be a change in use there or a VAT implication on that as well. So I just wanted to go for items supplied for no consideration, because most of the time people are comfortable with exempt, 0 rated and standard, but they don't know what to do if something gets given for free. And then, guys, things that are not in the course or furtherance of an enterprise, these are items that never have VAT. What are they? Salaries are not an enterprise, so no VAT. If you do a hobby, not an enterprise. An exempt supply is not an enterprise, guys. So if I rent out my house for residential accommodation, Residential accommodation is exempt. It's not in the furtherance of an enterprise. Okay, so please just understand that. Now, let me just explain what this is for. I've got a VAT dash sheet and an approach. So what I've done over time is the most common transactions that are zero rated or exempt from an exam perspective, okay, within the SAICA syllabus. I've put all of them onto a dash sheet, okay? And these are all of the items that are on the dash sheet itself. And what's going to happen, guys? These items in an exam, you normally put a 0 down next to. Now, they don't give you a mark for the 0. You need to explain to them why it is a 0. So it's very important that you understand the reason it's a 0. So certain veterinary medicines, 0 rated. Sanitary towels and pads, 0 rated. Whole wheat or brown bread or maize meal, 0 rated. Unprocessed fruits and vegetables, 0 rated. Cake wheat flour, 0 rated. Maize meal, all of those, okay? Not olive oil and not popcorn. Why? Maybe those are eaten by the rich, but olive oil and popcorn, not, but the rest are 0 rated. Fuel, 0 rated. Exports, 0 rated. Certain indirect exports, I will discuss when I do the diagram on exports with you. Supply an SA company on behalf of a non-VAT registered foreigner. So foreign company needs to do something in South Africa. They contact a local person to do their responsibility. You will not charge VAT. It is 0 rated, okay? Because you're doing it on behalf of the foreign company. They're not registered for VAT in South Africa. So you 0 rate the transaction. Sales rendered outside South Africa to an overseas company. It's like an exported service. Exported services, 0 rated. Going concern, 0 rated. Kruger Rands, 0 rated. Unwrought gold, 0 rated. Okay, so unwrought is in its pure form, okay, before it's been made into a ring. Rates, guys, 0 rated. Sure, people make mistakes with rates so often. Please just remember, rates are 0 rated, guys. You can't claim VAT on them. Interest is an exempt financial service. If you give or repay a loan, it's an exempt financial service. It's provision of cash. Purchase or sale of shares, an exempt financial service. Long-term assurance, life insurance, is an exempt financial service. Sale or letting of land outside SA is an exempt supply. Cryptocurrency purchases, an exempt financial service. If you're with me for the whole of this course, you will see that I will spend 20 minutes doing cryptocurrency because I think cryptocurrency is a spot for your exam. Okay, there's so many tax things that they're doing with cryptocurrency at the moment. Just know cryptocurrency is exempt. Residential accommodation, exempt. Transport of fare-paying passengers by road or rail is exempt. Okay, so any fare-paying passenger, it's exempt if they travel by road or rail. So I know that all of you are wondering why, when that taxi stops in front of you on Louis Botha Avenue, why it takes such a long time before they start going again. I can promise you it's not because they're issuing a VAT invoice, okay? Because taxis, exempt. Supply, transport of fare-paying passengers by road or rail. Educational services, exempt, okay? Trade union services, exempt. Motor car, input VAT denied. Entertainment, input VAT denied. Club subscriptions, input VAT denied. Okay, guys, motor car sold. Okay, I couldn't claim inputs on acquisition. I don't charge on output. Salaries and wages, not an enterprise. Fringe benefits, it depends, guys. So I've just listed the fringe benefits that don't have VAT on them. Holiday accommodation is entertainment, so input VAT's denied. Residential accommodation is residential accommodation, therefore it's exempt. Cash allowances, there's no good or service, it's a cash given. Guys, share incentive schemes is for shares, it's a financial service. Low interest loan is a loan, that's financial service. Paying of an employee's debt is an interesting one. The invoice is not made out to you. If the invoice is not made out to you, you don't get to claim the VAT. Depreciation is not a supply of goods or services, just vouchers, guys. So let's do Musica as a nostalgic thing. even though they're closing down all the musicas. If you bought a musica gift voucher, when you bought the voucher, no VAT, but there is VAT when you use the voucher and exchange it for goods. Okay, so that's there. Now, guys, how do you basically approach doing an exam question? Okay, you're going to say, is the amount found on a VAT dash sheet? Okay, if it's found on the VAT dash sheet, you're going to put a 0 down and you're going to put the reason for it. If it is not on the VAT dash sheet, you're going to say, is there a supply of goods or services from a vendor? If the answer to that is yes, guys, then there's VAT. And remember, normal rules are for invoice basis, value of supply is the amount on the invoice, time of supply is the earlier payment or invoice. And payments basis is the amount paid is the value of supply, time of supply is when the payment is made. And guys, then there's special rules. Now, everything that I'm doing after this in the notes has got special rules attached onto it. So where it doesn't have special rules, I'm going to do it. So let's just go through the structure again. Is the expense found on the VAT dash sheet? If the answer to that's yes, a 0 with a reason. Otherwise, is there a supply of goods or services by a vendor? Yes. If there's no special rule, just use the normal basics. If there's a special rule, I'm going to discuss it now. Okay. So first one, financial services, guys. Financial services are exempt. So if you see any of these items inside an exam, interest paid, interest received, exchange currency, checks, issuing, transfer, payment of a loan, debentures, shares, debt securities, unit trusts, life insurance, endowment policies, funeral policies, pension, provident or RAFs, buying or selling a derivative or granting an option. All of these are not included in the definition of financial services. Okay. What's specifically excluded, guys, is the bank charge. If they charge you a bank charge of 115 Rand, obviously there's a service there and you'll have that on it. So you guys can go through that. Next one, new and secondhand goods. So guys, okay, if it's new and secondhand goods, the first question you need to ask yourself is, have the goods been purchased from a VAT vendor or have the goods been purchased from a non-vendor? Now guys, if they've been purchased from a VAT vendor, there's always an invoice and you're always going to claim VAT off the invoice itself, if that makes sense. So it doesn't make any difference whether it's a new good or a secondhand good, you can claim VAT on it. And there are no special rules for it. So what are you going to do? You're going to say time of supply, earlier of, invoice or payments, value of supply, the amounts on the invoice. No problem with that if they purchase from a VAT vendor. Now, if you purchase something from a non-vendor over here in this diagram, there is no invoice that is a valid VAT invoice there. So if it is a new good, guys, tough shit, you can't claim any VAT because you don't have a VAT invoice. But if you buy a second-hand good from a non-vendor, you can claim notional input VAT. How do you do it? On the lower of cost or open market value. And when? Time of supply is when you physically pay for the goods itself. You cannot claim it until you've paid for it. There's some extra rules for fixed property, which I'll do with you just now. And again, I'm not asking you to remember all of the shit off by heart. You'll see inside here, there's the definition of a second-hand good. There's what you can claim for input VAT on second-hand goods. There's the notional input VAT section. And there's the timing for second-hand goods, where it says second-hand goods to the extent of payment. And if I was going to tag a book, I would use the same color tag and I would put all three of these tags on top of one another so you can find them. And I would look for the three same color tags that are on top of one another and say, in section 1, definition of a second-hand good is something that's been previously used excluding. So guys, if they give you a zebra or a hippo or whatever, just remember livestock is not included and certain gold products are not included in there as well. They're not second-hand goods. And how much can I claim? Section 1, definition of input VAT, paragraph B defines the amounts I can claim. And when can I claim it? To the extent of payment. There it is, 16.1. 16.3A2 double A. Okay, sounds like a breast size, not a, no, I'm joking. But yeah, if you guys understand, you can just tag all of the stuff there. Sorry, it's a long evening. I have to try to do some humor. Okay, next one, guys. Let's go back here. Okay, I'm not going through everything in the sheets themselves. Okay, so there's the VAT, there, financial services, secondhand goods. Okay, memberships and subscriptions, guys. Professional subscriptions. Okay, you can claim that on. So if I pay my SAICA membership fees, I get to claim. If I pay law society fees, I get to claim. Okay, if I'm a member of the South African Institute of Tax Professionals, I get to claim. Tax practitioner, sorry. Guys, that's on other subscriptions that are not professional. Input VAT is denied. So golf club, dirty Tinder, a running club, Wanderers Club, Virgin Active membership, all of those, okay, input VAT denied on memberships and subscriptions. Next one, entertainment. So guys, what's the rule with entertainment? Basically, provision of any food, beverages, etc. Guys, the one that's very common in exams is canteens. So you don't know whether a canteen is subsidized or not. If it is subsidized, it is entertainment, because then you're giving food cheaper to your staff. So the moment you get a canteen, it's not automatic that a canteen is entertainment. A canteen is only entertainment when the food is subsidized, because then it's entertainment. So I'm giving something to my employees cheaper. Okay, so canteens, if they're subsidized, are entertainment itself. There's a list of things there, guys. The exceptions to the rules. Okay, there's a whole lot of exceptions over here. I'm just going to run through them quickly. So guys, if you're in the entertainment business, you run a restaurant, guys, yes, it is your business to provide entertainment. You will claim VAT and you will charge VAT. Okay, if you in the entertainment business and you supply entertainment to promote your business, there's VAT. Guys, excess food is given to staff or welfare organizations by restaurant. Guys, if you do that, you don't need to reverse the VAT on the food. If you give it to a staff or welfare organization, you're allowed to still claim the VAT, even though you give it to a charity. Okay? Guys, whilst you're out of town, the next dot over here, if you're out of town, you can still claim the entertainment. Guys, entertainment provided in a transport that is included in an all-inclusive ticket. When you fly SAA, or when you used to fly SAA, there was a meal included. Guys, because the air ticket said air ticket, and it didn't list the meal separately, you can claim input VAT on the meal because it was part of a VAT invoice itself. So any entertainment provided with transport that's an all-inclusive ticket where the meal's not separately listed on the ticket, you can claim input VAT on that. Seminar organizers, input VAT. Welfare organization gives out food, you can claim. Food provided by ship operator to passengers, you can claim the input VAT. Entertainment provided to clients as prizes by betting establishments. I need to get the guy pissed because he's going to lose more money when he's drunk. You can claim input VAT on that as well. So those are the exceptions there. Motor cars, you need to decide whether something's a motor car or not a motor car. I need you to understand if it's a motor car, input VAT is denied. However, this is what is relevant, guys. It is not what you use a motor vehicle for that is important. What is important is what it looks like. So is the passenger space bigger than the load space or not? So if you want to measure, are the seats bigger than the boot, or is the boot bigger than the seats? If the boot is bigger than the seats, then it's not a motor car and you can claim that. If the seats are bigger than the boot, then it's a motor car as defined. You can't claim input VAT on a motor car. Okay, so that's there. Guys, if you've got 17 seats or more, even though it's all passenger space, you're not a motor car. So you can claim on a vehicle with 17 seats or more. you can claim as not a motor car. Guys, it's not how many people fit into that taxi, it is how many seats there are in that taxi. I don't care whether you can fit 27 people into that 12-seater. It's how many seats there are from a VAT perspective. It's got nothing to do with what you use the vehicle for. Okay, game viewing vehicles and hearses I'll discuss now, and motor car dealers. Just remember, for a motor car dealer, a motor car is not a motor car, it's trading stock. So motor car dealers claim VAT and charge VAT as per normal. It's not a motor car to them, it is trading stock. Just ancillary costs. Guys, please just remember, fuel, 0 rated, that's that block. Interest on a loan, exempt. The rest of the stuff, insurance, licensing, okay, running costs, cleaning the car, servicing the car, all of those you can claim input VAT on. The input VAT denied is only on buying a car, okay, not on the services. Next, sale of a vehicle, guys, it depends, okay? Okay, are you registered for VAT or not? If you are registered for VAT, you need to ask yourself, did I claim input VAT when I bought the car? If I did not claim input VAT when I bought it, I do not need to charge VAT when I sell it. Okay, so that's basically what's going to happen. If that's the middle block. If input VAT was claimed, then I need to charge VAT. Okay, and then guys, I know this sounds really, really strange, but I have seen it before. If you bought anything under the sales tax regime, that's 1989 and before. Guys, even if you did not claim VAT when you bought it, you still need to charge VAT now. So, I mean, it is conceivable that you bought your office building that you trade out of in 1985 with sales tax, and now you sell it this year, you will charge VAT on it, even though you didn't claim VAT when you bought it. Anything that was bought before VAT came into play, you need to charge output VAT when you sell it. Okay, conversion of a vehicle, guys. So from a motor car to a non-motor car. So I'm converting, I buy a Toyota, let me do a City Golf. I bought a City Golf, it's a motor car. I then take out the 2 back seats in the car and I make it into a load box. I'm converting it to a non-motor car. So when I buy the City Golf, input VAT denied. When I take out the 2 back seats, I'm going to claim input VAT because it's now not a motor car anymore. It's it's not a motor car. And then when I sell, I need to charge VAT because it's not a motor car. A vehicle converted from a non-motor car to a motor car, I buy a cab and a half, okay, claim VAT. Converted to a double cab, on the conversion, it's now becoming a motor car. Double cabs are always treated as motor cars in terms of the Act. So input VAT denied. When I sell the double cab, I need to charge VAT because I claimed VAT when I bought it. It originally is a cab and a half. And then guys, if I convert the car before use, okay, if I've not used it before, it's what it is afterwards. So if I run a mortuary and I need a hearse, but what I do with a hearse, I take a station wagon and I convert it into a hearse, okay? What's going to happen if I never used it as a station wagon? You wait until you see what it looks like. And a hearse, you can claim VAT on because it's definitely not for the transport of passengers. It's transport of the coffin and the dead person. So you can claim for a hearse and you can claim for a game viewing vehicle. Okay, you can claim. So you can claim for that. Guys, hearses and game viewing vehicles, please just make sure that you read through it. Guys, inside the tagging, I've got a definition of what a game viewing vehicle is. So if you tag properly, you can just check to see whether it's a game viewing vehicle. You can claim on hearses, you can claim on game viewing vehicles. Okay, sundry other vehicle considerations. If a car is acquired as a prize, you can only claim input VAT when you give the prize, and then there's going to be an output VAT when the prize is given. So at Monte Casino, if there's a car there for 6 months on the floor, you can't claim that until you give it out as a prize. And then there'll be an input and an output in the same period. Transport of fare-paying passengers by road or rail. Guys, it's an exempt supply. I buy a 50-seater bus. Normally, if a bus has got 17 or more seats, I can claim VAT. But I can't claim the VAT on a 50-seater bus if I'm using it for an exempt supply. Vehicle acquired for entertainment. Entertainment is input VAT denied. So an example of this might be a caravan. Okay, I do it because I'm going to use it for entertainment and go away on holiday. Can't claim. And hiring of motor cars, please just remember, if you hire a motor car, input VAT is denied. Okay. Output VAT on disposal of goods, you guys can just have a look at it. Just remember, guys, people tend to have this belief that if I didn't claim VAT when I bought it, I don't have to charge VAT when I sell it. And that is wrong. The only 2 times that you don't need to charge VAT on sale is if it is an exempt supply. Okay, so I bought a bed for my residential accommodation. I then sell the bed. I didn't claim VAT. When I bought the bed, it was exempt. I don't need to charge VAT. When I sell the bed, it was exempt. And the other time I don't need to charge VAT is if there is a input VAT denied. I bought the car. I couldn't claim VAT when I bought the car. When I sell the car, I don't need to charge VAT. But I'll give you an example. I bought a new car from a non-vendor. I can't claim VAT when I buy a new car from a non-vendor, but I will still have to charge VAT when I sell the car because there was an input VAT denied and there wasn't an exempt supply. Therefore, got to charge VAT. So it's only for exempt supplies and when input VAT is denied that I don't need to charge VAT, and that's what's on this diagram. Deemed outputs on the change of accounting basis. If I go from payments to invoice, there's rules for it. If you want to do it, you guys can do it by yourselves. I'm just doing it from completeness sake. Importation of goods now. So let's have a look at importation of goods. Okay, so I'm going to explain how this works to you. So it says here, consider a person standing on the border of Botswana and South Africa. You want a chocolate bar. It costs 10 Rand in Botswana and 10 Rand plus 1 Rand 50 VAT in South Africa. People would buy from Botswana because it's cheaper. So how does VAT legislation work? If you're going to bring it across the border, you need to pay the 1 Rand 50 output VAT to SARS. Okay. And I know this sounds really, really strange. I'm buying and I need to pay output. Okay. To SARS. Guys, normally I claim an input when I buy something and SARS would give me an input credit. The thing is, guys, if you buy something overseas, bring it across the border, they collect VAT at the border post. Okay. If you import it from a BSLN country, output VAT is charged at 15% of customs duty value, and it's when the goods are released from customs. If you're buying it from a non-BSLN country, that stands for Botswana, Swaziland, Lesotho, and Namibia. It's customs duty value plus 10% of customs duty value, plus non-rebated customs duty, plus other import surcharges. And why do I times by 15% and not 15 over 115? Because the amount when it comes across the border is not VAT inclusive. It's excluding SA VAT. And what do we do when something's excluding VAT? We need to times by 15%. When something is including VAT, we times by 15 over 115. Okay, so please just remember that. Just there's special rules with bonded warehouses. You can leave stuff in bonded warehouses and you only pay the VAT when you take it out the bonded warehouse. So there's like you can import it. I don't need all of it now. Put it into a bonded warehouse. You don't need to pay the input VAT now. You only need to pay the input VAT when you take it out the bonded warehouse. And there's a rule there with the block. Imported services are a strange thing. So let me just explain. Like when the World Cup was in South Africa, I actually did a little bit of work for Mnet. Okay. And we had a really, really strange thing because Mnet did the recording and did all the camera work for the World Cup. It then got given to an overseas supplier because they had the rights to the World Cup. It then got beamed to a satellite, and then Mnet bought the soccer games back from the overseas supplier. Now, that is what an imported service might be. It's something that you import, but basically it doesn't need to go through a customs thing. So the best way that I can do it is like if you download music, or you download a movie, or Mnet downloads a movie and shows it on their channels, or downloads a soccer match and shows it on their channels. Now, let me just explain what's going to happen. Okay. So in practice, if they were buying it from an SA vendor, and let's imagine they were paying 115,000 Rand, Mnet, that account, if they're buying it from a South African, what would happen is they would claim they would pay 15,000 Rand VAT across to the supplier and claim 15,000 Rand inputs, and there'd be no VAT effect. They'd pay outputs, claim inputs, no VAT effect, sorry. So what they basically say is when we import a service, okay, if there's no VAT effect, okay, don't worry about it. So if Mnet got the World Cup back in and they supplied it to people in South Africa, it's don't worry about it. I charge VAT on subscriptions. Therefore, I would claim VAT on the TV transmission. Therefore, don't worry about it. But let's imagine you're visiting an Mnet service center and they've got music playing, which is equal to entertainment. And what did they do? They downloaded it from Apple Music. Okay. Because it's entertainment, okay? Input VAT, denied. Okay. So what would happen, guys? Looking at this VAT account, they would pay output VAT, but they wouldn't be able to claim on the music because it's entertainment. So whenever you import a service and input VAT is denied on the service you're importing, like music, you pay output to SARS. And this is quite common in exams. You need to pay output to SARS because SARS wants the 15 grand that you're not claiming because it's entertainment. So if you bought the music from South Africa, SARS would get 15,000 Rand. Because you bought it overseas, SARS still wants their 15,000 Rand because you weren't going to be able to claim the input VAT. That's why on imported services, if you were going to claim input VAT, you don't need to do anything. There's no VAT effect. If it was an exempt supply that you were importing, you have to pay the VAT across to SARS. So that's there, imported services. And that's over there. I'm going to do exports, and then I'm going to give you a break. Okay. Diagram 15.1, exports of goods. Direct exports, guys, you can zero rate. That's when I take it outside the country. I can do it. If I'm responsible, I've got all the documentation, I can claim. Now, how it works, guys, is that if I get a third-party contractor to take it overseas for me, okay, I need to get all of the documentation back. If I do not get the documentation back within 90 days, I need to charge VAT. If I eventually do get the documentation back, then I can claim the VAT back. Okay, so I can get a third party to take it overseas. I need the documentation. The moment I've got the documentation, I can zero rate a transaction. Okay, an indirect export. So let me just explain. You run a jewelry shop in Sandton City. A foreigner walks in and says, I just have to have that diamond necklace, please. And then you take it to the till, and she says, don't charge me VAT. I'm a foreigner. I'm going to leave on a plane tonight. I'm going overseas. And you say this, I do not know whether you're going to take it out of this country. Therefore, I'm going to charge you VAT, and there's VAT reclamation at the airport, and you can go get the VAT back at the airport. Keep the invoice, keep the necklace, go show them that you've taken it overseas, that you're on an international flight, okay? Go claim everything back, and you can do that. So on an indirect export, if someone else is taking it overseas, you charge the VAT, they must get it back from customs when it goes across the border. Okay. And then exports of secondhand goods acquired from non-vendors. I'm just going to show you a practical example that I saw in practice. So, funnily enough, someone found a 1968 Ford, I think it was a Thunderbird, in South Africa. There were only 2 right-hand drives ever made, by the way. And one went to Australia and it got destroyed. The other one came to South Africa and a collector found it. He basically offered the guy 5,000 Rand for it. Okay, and what happened? Because it's a second-hand good, he claimed input of 5,000 Rand times 15/115. It's a second-hand good. What he then did was he exported it to Australia for 8 million Rand, believe it or not. Okay, so here's the thing. Exports are 0 rated. So what SARS does is it says, if you claimed notional input VAT when you buy something, so step 1, I claim notional input VAT. Okay, if I then export it, I'm going to 0 rate the sale. And what happens is the section says you need to give SARS back the notional input claimed. So even though he sold it for 8 million, he needed to give back to SARS 5,000 Rand times 15/115. Okay. So whenever you export a second-hand good acquired from a non-vendor, whatever any notional input VAT that you claim, you've got to give back to SARS when you export it. And that's what's going to happen. Exports of services, guys, you can 0 rate them. It depends on where the service is being rendered, though. So I've got you, a non-resident orders a tour from an SA tour operator to climb Kilimanjaro, 0 rated. Services taking place overseas. But if you order a tour from an SA tour operator and it's a tour of the Cape Wine Farms, you can't 0 rate it because you're giving them the tour inside South Africa. So you've got to charge VAT on it. So you need to understand, okay, where the service is being rendered. If a service is being rendered overseas, 0 rated. Also, guys, if you bring something into South Africa to fix, you can 0 rate it if you're certain that the good is going to be taken back across the border after you fix it as well. I've got that. It's in this block over here. If the goods is repaired in South Africa. And then if an SA resident goes overseas and renders services in a foreign country, the bill for charging those services would be 0 rated. So if Robert Mugabe needed a brain operation and you were the doctor that went and performed it, and you performed it in Zimbabwe, you would 0 rate your services. You weren't doing your professional service in South Africa, okay? Believe it or not, there is cases you need to know for the board exam. There are cases that I've got there. This case you need to know. It's a Stellenbosch Farmers Winery case. Essentially, there was an early termination of distribution right, and they surrendered their rights, okay? And it was for Bell's whiskey, and the location of a distribution right comes from Scotland, and therefore you could 0 rate it, but you can have a look at the case over here. Okay, this is just showing you with VAT how this works. So I would know the court case itself. That is a court case you need to know. Okay, so Accommodation and rental, guys. What's happening with this? If it's residential accommodation is exempt from VAT. So there's no VAT, it's exempt from VAT. Commercial accommodation, it depends whether it's office or factory, could be a hotel, okay? So there's different rules for hotels as compared to for office rent or factory rent. So general rule for commercial accommodation, office factory rent, charged at 15%. For hotels, for the room, it depends on how long you stay inside the room itself. So if you stay greater than 28 days, that is at 60% times 15%. If you stay less than or equal to 28 days, that is at 15%. Other services could be meals, could be telephone, that's at 15%. Okay, but if you tell them you're going to be staying for greater than 28 days from the beginning, from day one, they will charge you at 60% times by the 15% itself. The other thing is you need to actually just understand the concept of what the bill looks like. So at a hotel, you could have one of two things. They could sit there and say, this is the room, and the room is 500 Rand for the day, and then meals are 300. Okay, so that would be at 60% maybe, whereas this one will be at 100%. Okay, but if they decide to do the bill like this, and they say that it's room, but room includes meals, and it's 800 Rand, you can have that at 60% of everything. So it depends on what's actually on the invoice itself. So if it's an all-inclusive rate just for the room with everything else, everything can be at 60%, even though meals are included in there. It's like the plane ticket that I discussed a little bit earlier. Depends what's on the invoice itself as to what you're going to charge and what you're going to claim. Next one. There's commercial accommodation, 28 days or 29 days. I've got the discussion of an all-inclusive fee on the next page. So you guys can have a look at it inside that block, inside this block. There's another thing, guys, just with bad debts that get written off. Remember, if we charge VAT at 60%, the bad debt is also going to be done at 60% as well. So sometimes people forget about that. Okay, you could find something like that within a question. And then it says, okay, just remember for voluntary registrations, guys, that it's 120 for commercial residential establishment, not 50,000. But that I did with registration a little bit earlier as well. Purchase and sale of fixed property. Let me just go through it with you. If you're a property dealer, there's always VAT because that's your trading stock and there's always going to be VAT on it, whether it's residential or commercial. Okay, it's all there. Often you see, like in newspapers with advertising, they say, no VAT, save thousands. Actually, they've been quite disingenuous with that. It's like saying, why don't you, with a developer, they say no transfer duty, save thousands. What they're basically saying to you is, why don't you pay VAT at 15% rather than transfer duty at a much, much lower rate? You're actually paying more with the VAT being added onto it, but you don't have transfer duty if you pay VAT itself. So you can save transfer duty if it's a purchase from a dealer. Now, if you're not a property dealer, the question too is this a commercial or residential property? So property dealer, always VAT, whether it's residential or commercial. If you're not a property dealer, if it's residential property, no VAT, there's transfer duty. If it's bought from if it's commercial property, it depends. Are you buying from a vendor or a non-vendor? If you buy from a vendor, guys, what is the rule for property? VAT is levied on a payments basis and value of supplies equal to the amount paid times 15 over 115. And the time of supply is the earlier of payment or registration in the deeds office. So in a question, you need to be very, very particular about what's happening. You pay the deposit, can claim the VAT on the deposit if it's non-refundable. If it's a refundable deposit and you can still get out of the sale, obviously there's no VAT because it still might be refunded to you. Okay. Once the property is transferred into your name and you register a mortgage bond, you can claim for everything. And time of supply on the earlier of payments or registration in the deeds office. It's when it gets registered in the deeds office. If you buy from a non-vendor, if it's a new building, you can't claim notional input VAT on a new asset. We've done that in second-hand goods before. If you buy a second-hand building, guys, there is transfer duty, but you can claim notional input VAT on a second-hand building purchased from a non-vendor, provided it's not residential, it's a commercial building itself. And there are special rules for it. Now, you're never ever going to remember all of the rules when it comes to fixed property. So what you guys need to do is, there are 3 sections here, timing of rules for fixed property. You need to clearly demarcate in your book, section 9.3D, timing rules for fixed property. And it says fixed property where registration is done in the deeds registry on the date of such registration and on the date which payment is made, whichever date is earlier. You don't need to remember it. And then it says there's an additional timing rule for second-hand fixed property. There's the section numbers. Subject to the provision of BB to the extent of payment for consideration and registration in the deeds registry. So if you buy a second-hand building from a non-vendor, it's not just that, but you add that onto it. And remember, rates and taxes are 0 rated with it. And for all of these sections, there's the sections for import of goods. There's sections for export of goods. Every single diagram I've done with you, that's what the blue line is for. Blue line basically shows you the sections where they come from and what you need to highlight in your book. The section number, what you should put on your tag, and where the section in the act is. Okay, so let's carry on. Okay, please remember, you don't need to remember all of this. Insurance and assurance, guys. Again, you don't need to remember. There's section 8.8 here. It's for insurance payments. And what does it say? For a contract of insurance deemed to be consideration received on the date of receipt of the payment, provided it does not apply to payment relates to total reinstatement of goods. This is what you would highlight inside your book. So just going through that again, what can you do? If it's a payment, life insurance is exempt. Remember, assurance, life policy, dread disease, disability, all exempt. So endowment policies are all exempt. Financial services, short-term insurance, you can claim VAT input. If it's a claim, guys, if it's a claim for life insurance, dread disease, or disability, exempt. Exempt when we paid it, exempt when we receive it. If an insurance company pays out for short-term insurance, what happens? We should ask, is it an other asset or motor car entertainment? Remember, if it's motor car entertainment, no VAT claimed on acquisition, no VAT on the insurance payout. For other assets, there is a deemed supply value. VAT is the amount paid out. And time of supply is when the insurance company agrees to pay it out. Now, guys, if there's reinstatement of goods, what's going to happen with reinstatements of goods? There is no VAT for reinstatement of goods. Okay, can you see here it says insurance company replaces the asset? No VAT implications, enterprise is in the same position as before. And all of that stuff, just again, you don't need to remember it. There it is, section 8.8. You put the tag in, you go through it, you can know where to find everything. Let's carry on. Next one, rentals, installment credit agreements. So just let me explain. If you've got an installment credit or a finance lease, it's got one set of rules. Anything that's not an installment credit agreement is a rental agreement as defined. So what's basically going to happen, guys, is this. If it's an installment credit agreement, finance, lease, hire purchase, expensive sale. If it's a motor car entertainment asset, input VAT is denied. Anything else? Value of supplies, open market value times 15 over 114. Now, why would that be open market value? Because a lease agreement doesn't have a selling price in it. So you can see section 10.6, cash value of that supply. That's what section 10.6 does. So open market value of the supply. And what does section 9.3c do for insurance agreements? Time the goods are delivered or the time the payments of consideration, whichever time is earlier. So again, it's not a process where you need to learn all of this stuff off. There's your time of supply rule. You can do it whenever you like, but you claim the asset up front for this. It's like you buying it with an installment credit agreement or a finance lease. If it's a rental agreement, an operating lease, you claim VAT on each payment, okay? But if it's motor car entertainment, remember, input VAT is denied. Guys, repossession of goods, guys, please just be careful. It's not what the goods are worth. It's what the debtor is recorded at in your records, okay, when you work out repossession of goods. Because you're going to be reversing out the debtor and getting an asset back. It's based on what the value of the debt is, not what the value of the asset is. But you can have a look with repossession of goods. It's on 19.2. Creditors not paid within 12 months. If you don't pay a creditor within 12 months, in month 13, you're required to reverse the VAT out and pay the VAT back to SARS. Bad debts, guys, depends what the bad debt is for. If you charge VAT on the debtor, on the debt when it was created, there's going to be a VAT input when you write off the bad debt. If it's on an export debtor, it was zero rated. Therefore, there's no VAT on the write-off of the debt because it was zero rated. If it's a staff loans are exempt. Remember, no VAT on exempt items. If it's a staff loan because you bought stock, obviously it would fall under that section over there, and you would have charged VAT when you sold the stock to the person. That's not a staff loan. That's from a sale within South Africa. Interest charge on overdue accounts. If you write off that as a bad debt, just remember interest is an exempt supply. Therefore, there's no VAT when you write off interest. Okay. Just with commercial accommodation, please just remember that 60% rule. If you've charged VAT at 60%, then you need to write off VAT at 60% for bad debts as well. Discounts, guys, just one or two concepts. A trade discount is a discount you get if you buy something. So trade discounts, they've got no VAT effect. So it says, consider a good normally sold for 11,500 that's sold for cash of 6,900. After applying a trade discount of 4,600, no discounts in the journal entry because there's nothing that needs to happen with that discount. Settlement discounts, if you pay within 10 days, you will get a discount, okay? Because there's an actual transaction there. I have decided to pay within 10 days. There will be VAT on settlement discounts. So this example actually shows you how to deal with a settlement discount. Fringe benefits, guys, if you give an asset to an employee, a service to an employee, or a company car to an employee, there's a fringe benefit. It's a deemed supply. Please just remember when you're doing fringe benefits, it's classified as a deemed supply in terms of the Act. And again, if you go into your section here, there it is for fringe benefit, section 18.3. Benefit or advantage to an employee shall not apply to exempt suppliers, zero rated or entertainment. So those are all the items that are going to be there. And then 9.7, it says, shall be deemed to take place at the end of the month that it gets included in remuneration itself. There's a deemed supply there for fringe benefits themselves. Guys, what doesn't have? Cash allowances, low interest loans, housing subsidies. I've already gone through all of these as to why they do not have any VAT on them. So all of these get excluded out. The only ones that we've got VAT on fringe benefits is when you give an asset to an employee, give a service to an employee, or give a company car to an employee. Now, here's a really, really interesting thing. There's an example here, and I just want to go through it and just show you. If I buy trading stock for 11,500 Rand, here's my journal entry, debit trading stock 10,000, debit input VAT 1,500, credit, okay, bank 11,500. Now, imagine I was to give the stock out to an employee as a fringe benefit. What would you base it on? whenever you give something to an employee as a fringe benefit trading stock, it goes out at cost. How much is your VAT on that item? Sorry, this gets asked quite often. So if you give the stock out to an employee as a fringe benefit, guys, what's going to happen is you're going to credit your trading stock, 10,000. Okay. You're going to debit salaries with an amount, and you're going to credit output VAT because we're giving it to an employee. I would like you to think about what you would put into the output VAT over there. The output VAT is actually 10,000 Rand, because that's the value of the stock, times by 15 divided by 115. 1304. And what will your salaries expense be? It'll be 11,304. I know that you think that the 1,500 and the 1,304 need to be the same, but they do not need to be the same. Please be careful. This is something that gets asked quite often within an exam environment. Just because there's something with an input doesn't mean it's with an output. Okay. And how do you value the fringe benefit for tax purposes for that? It's basically based on what you value it in your individual tax calc itself. It's valued at 10 in the individual tax calc. That's why there's 1,304 Rand for that. Overpayments, guys, basic rule. If it's not repaid within 4 months, you have to charge output. If you then repay it after the 4-month period, then you can claim the input back. So someone overpays you, nothing. 4 months later, if you haven't given it back to them, output VAT and then input VAT. Transport of passengers and goods, depends on what you're actually looking at. Transport of fare-paying passengers by road or rail. Okay, we've already done. Where's it there? Sorry, exempt. From inside SA, outside SA, 0 rated. So international transport, 0 rated. From overseas to South Africa, 0 rated. It's international transport. Fare paying passengers from a location outside SA to a location inside SA, 0 rated. Okay. International transport, 0 rated. The transport of fare paying passengers from a location inside SA to a location inside SA is 0 rated if it was part of an international trip. So if I'm going to the UK and I fly from Durban to Joburg, and then I change planes and I go from Joburg to the UK, that's part of an international trip. The local flight will be 0 rated because it's part of an international trip. Transport of goods within South Africa, VATable. It's there. Transport of goods, when you export them, are 0 rated. And then the transport of fare-paying passengers by air between destinations within South Africa is VATable. Joburg to Cape Town, VAT. Joburg to Durban, VAT. Durban to George, VAT. Okay, so all of that gets included. Just some sundry rules quickly. Betting supplies, it's only when they get paid is there. VAT on betting supplies. Door-to-door sales, because in South Africa, you can cancel door-to-door sales within 5 days. VAT is only recorded on the 6th day when they know that you haven't canceled the sale. Single supply treated as a multiple supply. Okay. So guys, I need you to just understand. Okay. So you work at an audit firm and the audit firm bills the client. What do they bill the client? They bill the client for services, X amount. They bill for travel because you had to travel to the client for another amount. And maybe they're billing for meals, which is another account because you had to do a whole lot of overtime itself. Please just understand that there is only a single supply there, because what are you providing to them? You're not providing travel to them. You're not providing meals to them. You're providing an audit. So all of that stuff will get combined together and there'll be VAT on the whole bill. That's an audit fee. You can't sit there and say, oh, look, this is meals, therefore it's entertainment, which is exempt. And look, there's travel and it's fare paying passengers. You can't do anything along those lines itself. That single supply is for auditing. and you will claim for VAT on everything. And then so there's a couple of administrative things here. You guys can read through it. Okay. Everything is over here. I'm not going to go through this.